Virtual's protocol is finally recovering. It's the best performing cryptocurrency in the last 24 hours among the top 100. The question is, how much longer can this rally last? We're going to look at various drivers of demand and supply. We're going to look at the perpetual futures market, so the levered bets on the price. We're also going to look at the spot market, so direct on-chain data. What is happening on the base chain? Who is buying, who's selling? Now, in the last 24 hours, Virtual's protocol went up by 13%. And that 13% was by quite a margin. The second best performer was Fartcoin. We've already talked about a lot of fundamental data in prior videos. I'm publishing videos on Virtual's protocol regularly over here. For example, have a look at this. This is the trading fees of Virtual's protocol over time. We peaked at the beginning of 2025, then had a massive decline subsequently, and now we are slightly recovering again. The reason why this chart matters is because it's one approximation of the potential demand, right? The more the protocol is used, the more demand there will be for the virtual token. A lot of those virtual AI agents are directly coupled with the virtual protocol price. The supply, of course, also matters. It had been stable over the last months, but in June there will be an unlock. The question is, how quickly will that unlock get sold off? Now, Virtual's protocol is traded on the Base chain, and Base is a layer 2, so a scaling solution on top of Ethereum. So Virtual itself gets traded versus ETH. What we see over here is the virtual performance relative to ETH. So I like those relative valuation charts. They always give us a clearer picture of what happens idiosyncratically to an asset. And we did have our small crises. So this was an 83% drop of Virtual relative to Ethereum. What we see over here is a 78% drop. We have recovered from both of those declines. But what I find interesting is when we take the all-time high in Virtuals and we take the current price relative to that all-time high, we could see an additional outperformance of maybe 73%. But when we look at the usage of the protocol, if we increase that by 73%, we don't get anywhere near the heights of January of 2025. So it seems like now the price is higher relative to its usage compared to a few months ago. One potential reason for that higher price could be leverage, or in other words, perpetual futures. If there are a lot of bets on the price tends to go up. So this is the open interest in green and the virtual price in yellow. When there are more and more bets on the perps, the price on spot also tends to go up. Right now, the majority of those perp traders are actually betting on falling prices. So the shorts have to pay the longs in order to bet on falling prices. Thus, there is a potential risk for those shorts to get liquidated if the market manipulators decide to squeeze them. In other words, to buy up a lot of the supply on the spot market, to push up the price, to liquidate the shorts, to push up the price even further. This, for example, happened over here on the 20th of February. The price of Virtual was at $1. The open interest weighted funding rate was very negative. The shorts had to pay a lot of fees. And then came a little micro squeeze. The Virtual protocol price went up by 22% to $1.22 until the open interest funding rate was positive again. There's a good chance we see something similar again very soon. Let's go back to the spot market. So let's have a look at what happens directly on the Base chain. Virtual is still the largest of the tokens according to their liquidity pool size on the Base chain. So here are the trending tokens. The Virtual protocol is at the top with a liquidity of $266 million. Number 2 is Aerodrome, and that has only 1/5 of the liquidity. There are more than 600,000 holders on the Base chain, but not all of those holders are created equal, right? Some of them might just hold a few cents of the token, while other wallets might hold hundreds of thousands of dollars worth of the token. And so since the price is currently at roughly $2, if a wallet holds 500 tokens, it has roughly $1,000 worth of the token. That's what we count here on the chart on the left. So that's what I consider small retail. To be counted for the chart in the middle, a wallet has to hold at least 5,000 tokens. So that's now $10,000. To be counted for the chart on the right, it's another 10x. That's 50,000 tokens or $100,000 worth of the token. The small retail investor tended to buy in more and more. They recently bought some additional tokens again, but medium-sized retail and whales tended to rather sell this recent rally. They went down in numbers. And that happened while the number of buyers and sellers is actually currently recovering. Let's have a look at the number of mega whales and institutional investors. So this is now the number of wallets that have at least 500,000 virtual tokens, so $1 million worth of the token. They, interestingly enough, did buy in the last few days. So while the $100,000 people sold, the $1 million people bought, and the $10 million people, or rather centralized exchanges, they also went up in numbers. So those charts are independent of the price movement, right? Those are just number of tokens. Now, isn't that fascinating? The extremes in the market are buying, so the small holders with $1,000 are buying. The very big holders with at least $1 million worth of the token, they are buying as well, but the middle is selling. It appears as if interest in the token is growing again. And so since the market as a whole is going up, Bitcoin trends upwards, money is flowing into the space through stable coins, I think there's a good chance that virtual will benefit from this more than average, just because of the inherent leverage, just because it's smaller than just the average altcoin. There might even be a chance that even more people bet on falling prices with that upcoming unlock. And again, as there's more and more short interest, the price is more and more likely getting squeezed. Could we go back to $4 in virtual again? Potentially, but I think the most important chart is the price relative to Ethereum. After a 70% gain, we're probably already quite elevated, and it might make sense to at least take partial profit. Now, some people might make the argument that all of this analysis doesn't help at all because markets are efficient. But I tend to disagree because it's people that make markets efficient. There are clearly winners and losers in the game, and the winners tend to continue to win. So it's not just a game of luck, it's a game of luck and skill. And the nice thing about crypto is that we've got much more data in this market compared to other markets because every transaction is publicly recorded on the blockchain. But very few people actually use that data properly. And that's in the end where winners and losers are born. People that don't look into the details enough, they tend to lose over time. That's the vast majority. Now, the charts that you've seen in this video come from a tool that I've developed myself on top of the Dune Analytics platform. It's part of the premium membership of this channel. There are two dashboards. There's a dashboard for Ethereum related blockchains. So those are the ones we can analyze. We can plug in any token into this tool, and then we can see how many large holders are there, how many small holders are there, how many new users enter a token, and how many buyers and sellers do we have over time. It's also always useful to look at the token ownership, right? Is a token mainly held just by the whales, by the people that have more than $100,000 worth of the token? If that's true, it's potentially, especially if that happened forever, a quite dangerous token. And so this is how I think about this fundamentally. The target with trading and with investing is to be better informed than the average, to be the person that makes the market efficient. If we are better skilled than the average person, then we should over time also make positive expected value bets. So that means that not every single trade will be positive, but on average, we should make money. Again, because we can estimate the probabilities better. We can see the dangers and the potential upsides better. Now, I have made more than 100 tutorial videos on various topics within crypto. How to do on-chain analytics, how to build a Dune dashboard like we've just seen. But of course, you also get access to the dashboard itself. Also about risk management, about how to properly use leverage, if that's your thing. All kinds of videos. Feel free to check them out. The newest video is this one, how to use perpetual futures and how to use the Hyperliquid platform to beat others. The videos are posted on the website, but they're also posted directly in Telegram. And here's the feedback to that tutorial. Feel free to stop the video and read through this yourself. But of course, we also need to start somewhere. And so I'm personally, of course, sharing my own trades as well as I open them. Of course, I can't share the newest trades here on YouTube, but have a look at this. This is on March 3rd. I'm adding another short, Cardano, relative to the US dollar. And the explainer was in a premium update video. So I publish premium update videos every 3 to 4 days. I then added more exposure on the 11th of March, and I then closed it on the 7th month of April. So of course, not every trade works out that well, but Cardano went down relative to Bitcoin by 36% during that time. And so with this membership, I want to do both. Of course, I want to make it profitable very quickly. That's why I share my trades, but I also want that the vast majority, at least of the members, takes the time to learn as much as possible. That in the end, you might not even need the membership anymore. You can make your own profitable trades. Now have a look at this. This is where our members share their winning trades. If you use the right leverage, if you know how to do proper risk management as well, you can make hundreds of % in a single trade. It's all about being prepared and knowing the data better than most other market participants. So feel free to check it out. It's currently $125 US per month. The price has been reduced because currently the attention on crypto is still relatively low. Once Bitcoin hits new all-time highs again, then I might go back to the 165. But the 125 is locked in for everybody that signs up now. So when the price increases, when you are still subscribed, your price will not increase. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. There's also a link to Premium directly here on the right. Just click on that. It will lead you directly to the website. So see you next time. Cheers.